And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to another week of The Real Investment Show. As basically we're going to start this week coming off a really good week in the markets last week. Nice rally coming back from that correction. So, that Japanese yen carry trade blow up thing, that was like months ago that happened. Seems like anyway. A good week last week. Of course, lots of stuff going on this week and really next week as we get ready to wrap up the month. We've got the Democratic National Convention starting this week, so that's going to be kind of big headline news. Also, we have the Jackson Hole Summit, where all of the economic elites, central bankers around the world, will all gather and determine the fate of the world. And, so that's going to be kind of moving markets. We also have Fed meeting minutes coming up next week. So, and we've got 4 Fed speeches this week. So even Jerome Powell will be speaking this week. So again, a lot of stuff going on that will potentially kind of move the markets here a bit. So we'll kind of see what's going on. We'll have a lot of stuff to talk about, obviously. Monkeypox now back in kind of big concerns, talking about another rise of monkeypox. Going to have to create another big round of vaccines for that. So that'll maybe help some of the vaccine producers. So we'll keep a watch on those stocks. Also, interestingly enough, big surge in COVID. What do you call it when you get tested? Results.
Incidences.
Yeah, incidences, yes.
Yes.
A big surge in COVID incidences. But none for RSV or flu. So we're back to that whole trend where all of a sudden everything tests positive for COVID, even though it's something else. So all this is kind of all circling around just before we get to the election. So just kind of keep your hats on. This is going to get interesting here over the next month or so, particularly as we get closer to this election. So there'll be a lot of stuff kind of driving markets all around. And also not just stock markets, but also bond markets as well. So I've talked about how bonds are very, very overbought right now, yields very oversold. Could see a decent reversal of that kind of structure for bonds heading into the election. We're starting to see some kind of pressures sitting out there that could affect bond prices in the short term, and that would give you a bit of a correction here in bond prices. And again, the longer term trend of interest rates is lower, but they're not going to go straight down. So again, be careful. As we talked about last week, you really can't buy bonds here. Look for an opportunity where rates tick up a bit, maybe to 4.1%, maybe 4.2, somewhere around there. That's going to bring bond prices down, and that'll give you a better entry point to add fixed income to your portfolio. So outside of that, though, we've got a lot of stuff to get into this week as well. Again, we got economic reports coming out. I do want to spend some time this week. I've got an article coming out on Friday about this recent retail sales report. So, it was kind of really knocked off as just a stunning report of retail sales and how strong it was. But really, once we start to dig down in those numbers, again, I've got a report coming out on Friday on this, is that, it's not really what it seems. And again, it just really goes back to the fact that consumers are indeed slowing down and coming under pressure, and we're seeing things like consumer debt to DPI now getting really stretched to where previously it's been a bit of a problem for consumers to make ends meet. But we'll talk about that later this week. Let's talk a little bit about what you need to know before the bell this morning, because again, as I said, great week last week for the markets. We've had just a phenomenal recovery here just over the course of just really 5 days. Came off that Japanese yen carry trade blow up thingy that happened, thingamabobber, and that's led to this fairly strong rally here as a recovery. Now, interestingly enough, there's a big gap right now between the S&P and the Japanese yen. The Japanese yen has actually started to reverse here a bit, and when we saw that happen before, that's what led to this fairly decent correction in the market. So again, right now the markets aren't paying much attention to it, but I don't think that whole issue risk thing is over just yet. So we want to be a little bit cautious about that at the moment. And just ironically, I hate analogs of any type where you compare this market year looks just like that market year, but there is a very interesting correlation between this play out in the market this year and what's been happening to 1987 when you had the big crash, which came after a correction in the markets. It rallied back to about 2.5% of all-time highs, exactly kind of where we are right now. And then you had the big fall off in 1987. So I don't think that's going to happen. I don't like analogs because there's too many variables at work that can make things turn out differently. But it is kind of spooky how close it is right now. So we'll keep a real close watch on this as we go forward. As I said, of course, keep a watch on interest rates. I think that interest rates can reverse here just a bit and see potentially a bit of a retracement in those rates. We've seen them come down fairly sharply here. They're rebounding here a bit. I think those can move up here again to like 4.1, 4.2. That would not be surprising. That would basically just take us back up into resistance of these moving averages, which are now trending lower. And that's why I'm saying, if you take a look at where interest rates are headed, they are trending lower, but we are about to trigger a buy signal on interest rates. So again, that suggests that interest rates are going to move up here. Again, some economic data coming out stronger than expected. Maybe the Fed not as aggressive on cutting rates as everybody was hoping for. There's a lot of things that can happen here over the next couple of weeks that could certainly kind of push these rates back up here a bit. And that'll give you a better opportunity to add, like I said, add fixed income to your portfolio. Outside of that, crude oil also continues to basically just kind of flop around here within a big consolidation range, and that's fine. Again, that hasn't really gone anywhere one way or the other, and there's not a lot of stress right now economically. The one thing though is that these kind of lower oil prices are weighing on the energy sector a bit, but also this is keeping inflation near term under control because there is a high correlation between short-term moves, month-to-month changes of inflationary pressures driven by energy prices. But again, there's oil's just not been doing a whole lot as of late. Volatility, of course, that was the big story just a week ago, had this massive spike in volatility that has been completely erased. We're now running back around 15 on volatility. So again, that whole volatility spike that was a big concern just 2 weeks ago has completely reversed itself. Outside of that, to take a look at international markets as an example, they've been recovering here a bit. But again, you've got to really take this into kind of a longer term view because the short term rally in emerging markets looks great. And it looks like that if you just take a short term look at the chart, it looks like it's been doing just fantastic. Pull this out about 2 years. And again, we take a look at emerging markets. They still even haven't set a new high yet. They've been doing better, but again, they're still below their 2020 peak. International markets, that was international markets. I apologize, I said emerging markets. This is emerging markets. Emerging markets is a very different picture here. Emerging markets haven't done much since the crash in 2020. They've just really gone sideways and have not really done a lot. So again, just outside really of domestic stocks, that's really where most of the returns have been delivered this year. Importantly, mostly in the S&P 500, the NASDAQ, much more so than we're getting out of small and mid-cap stocks as well as emerging markets and international. So again, just kind of keep that all in place as you kind of look at your asset allocation because some of these markets are delivering a drag to portfolio performance. And kind of traditional asset allocation says own some of this, own some of that, own some of this other thing. Most of these other markets have been dragging on overall portfolio performance for the last year or so. So that's just kind of a quick trip around markets this morning. We'll talk some more about Kamalanomics coming up after the break. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show. Or just click on the show links at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show, of course. All right. So it was interesting Friday. Brent was out. I didn't know Brent was out on Friday. So I apologize. There was no show on Friday. He just kind of surprised me with it. I didn't actually realize. Normally on Fridays, I get up early and I drink my cup of coffee, hang out with the dogs a little bit, then I go sit down to kind of start, getting ready for Friday, start writing as I need to do. And then I tune into the show to listen to Rich and Danny for Financial Fitness Friday. There was no show on Friday. So I text Brent, what's wrong? He says, oh, I'm off today.
I'll let Rich and Danny know.
I appreciate that. So, a few things happened on Friday. Kamala Harris announced her Kamalanomics, which is her new idea kind of to help fix the inflation problem. I think it's interesting, right? Because, she's been talking a lot lately about, if she gets elected, she's got a plan to bring down inflation and to fix the economy and these type of things, make it better, get wages up, those type of things. And I think that's awesome, right? That's fantastic. But you're the vice president. Why haven't you done it? Why don't you just do it now? You're the vice president. Why wait till you're elected, right? You could start those policies right now and do that. But this is always the issue of politics in general, is that they talk a great game, but what actually happens in reality are two different things. But some of the things that she's talking about just shows, a real lack of understanding of basic economics by her team, the people that actually wrote. She didn't come up with these ideas, by the way. These are not her ideas. This is her team's ideas. Whoever her handlers are, right? These are her ideas. And so they came out with this plan for fixing inflation by using price controls, so bringing down the price of housing. The government will just step in and build 3 million new houses. And this will fix all of our problems, right? This will just be fantastic. And don't worry, it's just a small tab, in terms of, more debt for the government. But, these are the policies, right? And these sound great, right? So if you've been trying to buy a house and you just can't afford to buy a house, and look, I get it. Housing costs are expensive, but that's what you get when you spend a decade at zero interest rates. And that's what you get when you inject the economy with $44 trillion. You're going to get elevated house prices. When you send checks to households and you shut down the economy, you're going to get inflation. But see, these are, and the importance about that is that the issues that we have economically are a direct result of government intervention, right? Government told us that they were going to fix these things. Go back to 2008. Sure, healthcare costs have been rising a little bit, we had 20% of people that didn't have access to health care. It's a terrible thing. So the government decides they need to get involved. We got to fix this. So we've got to do Obamacare, the Affordable Care Act. So we passed this thing. Flash forward, 15 years. We still have 20% of the population that don't have access to health care. Actually, it's closer to 30 now. Healthcare costs are massively expensive compared to where they were. They've exceeded the rate of inflation. And we've had all these other problems. And the one thing that nobody ever talks about is the billions and billions of dollars. We're talking a few $100 billion, right? That was basically flushed down the drain because we opened up these centers around the country to get people enrolled into the Affordable Care Act, and they all went bust. But again, this is just an example of when government tries to solve things, right? So government's going to get involved in, creating clean energy, right? So a lot of these, companies that the government invested in went bankrupt. It's just historically, the government is a very poor allocator of capital. If you want something done right, you get private companies to do it. You provide a function for them to be able to do what they need to do, right? You can have a policy that says, hey, we really want to develop this. Let private companies do the allocation of capital. They're much better at it because they have to make a profit. So they're much better at managing those cash flows of that business and that project. But you can pass a regulation that says, hey, we're gonna provide some tax credits, or we're gonna provide some benefit, for companies that would build whatever it is you want to build, whether it's a solar farm or a freeway or a bridge, whatever it is. You can provide some incentives through tax credits, et cetera. Hey, if you'll invest $1 billion of capital into building this bridge, we'll give you tax credits for it, whatever. But private companies do a much better job of that. But history is explicitly clear that the government getting involved in anything has extremely bad outcomes. And while Kamala Harris is, kind of talking good ideas for young voters who can't afford to buy a house right now, they can't afford to pay their bills, it's certainly very appealing. Oh, great. If I elect her, she's going to stop price controls. She's going to use price controls to bring down the cost of groceries. That's not the way it works. And if you want the actual end result of price controls, go look 90 miles south of Florida, because that's all you need to know about the outcome of price controls. You want to build 3 million new houses. That's great. It's not going to work out the way that you think it's going to work out. It's not going to bring down the cost of housing. So there's all these issues that we have to look at. And again, as we kind of look at these different, outcomes historically, government involvement in anything, every time they tell you, Ronald Reagan once said, beware of when the government says, I'm here to help you, right? Because it doesn't work out that way. But we go back for 40 years, back to 1980. This isn't the first time, right, that the government has got involved in trying to fix something or try to help something. And we've been doing this for 40 years, whether it was, reforming Social Security, giving more people access to Social Security, Medicare, welfare, whatever it was. These were all issues that the government said, hey, there's a problem, and in order to get elected, we need to fix this. So what's happened over time, of course, is that while we've been involved in all this, and we've been using lower interest rates, more, give people more access to credit. We deregulated the financial industry back in 1980 under Reagan. And again, this isn't Democrat or Republican. This is everybody. I mean, this is since 1980. When Ronald Reagan took office in 1980, the first thing he did was deregulate the financial industry, this was going to be great. It's going to give people more access to stuff. And it did. And banks started sending out credit cards to anybody that could basically fog a mirror. And over that course of time, of course, we did create a lot of wealth, right? We've created this massive increase in wealth from 1980 to present that's relatively unprecedented. In fact, if you take a look at real household net worth, this is inflation adjusted, it has far exceeded the growth rate of the economy. But unfortunately, in that process, we've also segregated the economy into those in the top 10% versus those in the bottom 90. So when you talk about real household net worth, it's not equally distributed across households. What these policies have done, and most importantly, since the financial crisis, what these government interventions have done more than anything else is really exacerbated that gap between the wealthy and everybody else. And more importantly, has just shrunk the middle class entirely to a large degree, which is a big driver for economic growth. And this is why economic growth has kind of trudged along. And we're hoping to maintain 2% growth now, where pre-1990, 2% growth was considered pre-recessionary. You didn't want to be close to 2%. That was terrible if you were close to 2%. Now we're just hoping to get 2% growth. But that's where we derive from over the course of the last really 44 years. You know, the other issue is just taking a look at the amount of debt. And again, when we take a look at debt to GDP as a function, you know, people keep talking about, oh, we've issued so much debt and this is a problem for so many reasons. Yeah, the real problem, though, is that debt erodes economic growth. And once we began taking on, this is total debt to GDP. So this includes, you know, government debt, mortgage debt, everything, right? So if you take a look at total debt to GDP, more debt didn't create better economic prosperity. More debt reduced economic growth because of basically the detraction of interest, you know, debt service, right? I've got to service all that debt. I've got to make credit card payments. I've got to make a mortgage. I've got to make a car note. I've got to make all these payments. Well, that's money I can't spend in the economy to generate economic growth, because economic growth comes from activity. So the more money that we take away from individuals through taxation, through and through debt service, and of course, the more debt service the government has, the more taxes you have to have, right? And again, it doesn't mean income taxes; it's all taxes, right? Whether it's an increased gas tax or an increased utility costs, whatever it is, you're being taxed, and that takes away from money to spend within the economy. So the more debt you have, the more degradation you have to economic activity, and slower economic growth it becomes. We'll finish up on this on the other side of the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult.
There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Food in total is now making up 30% of the average discretionary income.
I believe it. I mean, that is our largest expense is food.
Yeah.
And we rarely eat out.
The Real Investment Show podcast.
Our biggest frustration at home is how do we do this cheaper?
Yeah. No, I agree. I agree. We're running Hunger Games at our house.
At realinvestmentadvice.com.
So, if you can make it to the table without getting killed, you get to eat.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show this morning. It's talking a little bit about Kamala Harris's new plan to fix the economy for a moment, and just really kind of looking back at a bit of history that, the worst thing that we can do is allow government to get involved in anything, right? They've never had a positive outcome for anyone, ever. Right. So, this is why when you talk to conservatives, they want smaller government, not larger government, because it's great if you want larger government, right? You want the government to pay for everything. That's fantastic. But there's a consequence for that. And the consequence, as you try to move more and more towards socialism and that dependency kicks in, and we'll talk some more about that in a minute, but, that's where the negative outcomes evolve. And that's because somebody's got to pay for it. And so these things sound great, if you're have low income and you're, struggling to get by, and the government says, hey, I'm going to try to make your life better. It sounds great, but the consequences, and I'll give you a good example of this. So back during the COVID shutdown, government stepped in and says, hey, we're going to, we need to help everybody with childcare. So we're going to give everybody an accelerated childcare, and we're going to send you money for childcare. It was great. It was like, oh, this is awesome. I can do what I need to do, and I've got this money to pay for childcare. Sounds great. What did they think was going to happen? That in a vacuum, that I would give Brent an extra $1,000 or $1,500 a month, and he would be able to all of a sudden pay for childcare for his kids? Is that what they thought was actually going to happen? I mean, does nobody actually have any economic sense within the government? Because just common sense, forget economic sense, right? Just common sense. If I know that you've got an extra $1,500 to spend on childcare and I provide childcare, what do you think I'm going to do? I'm going to raise my prices. And that's exactly what happened. Childcare went shooting off through the roof. So everybody that needed childcare had money to pay for childcare but could no longer afford childcare because the prices went up. And this is the problem with any time that the government, and this is why you had inflation of 9% last year. Because when you shut down the economy, have no supply, and you give people money to spend, everything goes up in price. But this is what happens anytime that you adjust. So, for instance, she wants to put price controls on food. First of all, let's stop for a moment because they're talking about price gouging. These evil corporations are price gouging people. No, they're not. All you have to do is look at PPI and CPI and you will know that they're not price gouging people. In fact, just take a look at net profit margins. Sysco Foods is one of the largest providers of food and basically everything. If you run a restaurant, Sysco Foods can provide you everything that you need to run your business. From the food to the napkins to the napkin holders to the utensils, the glasses, you name it, Sysco Foods provides it. They're the largest restaurant supplier probably in the world. Pre-COVID, their net profit margins, so net profit margins after taxes, everything, their net profit margin was about 3%. During COVID, when we had the shutdown, they had a net loss on income. So their net profit margin was negative during COVID. Now it's being claimed that they're price gouging people, but yet their net profit margin is about 2.7%. It's lower than it was pre-COVID. And the same thing goes if you go look at McDonald's or any of these other companies, right? They're not price gouging because why? Their cost went up. Wages went up. Their operating expenses went up. Their input costs went up. Take a look at PPI and CPI and see exactly the same thing. They run neck and neck. So this whole idea of price gouging is complete horsepucky. But it sounds good to get votes. Right, I'm gonna fix it. I'm gonna put these price controls on, and I'm gonna fix this. But what happens when you put on price controls on anything? They'll stop producing it, and I'll produce something else that doesn't have a price control on it, and then you wind up with food shortages, etc. So again, you want to talk about inflation? Price controls will get you more inflation than anything. And again, if you really want a good example of how price controls work out, just go 90 miles south of Florida. You can take a little quick boat ride over there and check it out for yourself. You may not come back, but you can run over there real quick. If you don't know what's 90 miles south of Florida, it's Cuba. Just if you don't know your geography. But let me show you a chart real quick. This is a chart of wages. This is the year-over-year rate of change, right? Wages, personal consumption expenditures, 70% of the economy. Wages, gross domestic product, that's those jiggly lines. They're all on top of each other. I'm going to explain to you why that's important. The black line is consumer credit to GDP. Now, you'll notice two things. One, pre-1983, we didn't have a lot of government intervention. We were mostly manufacturing based, didn't have a whole lot of government overreach. We were running no debt, no deficit. We had minor debt in terms of government compared to, it was a lot then, but that you can't even show it up on the chart today, comparatively. But you'll notice that GDP, wages, and personal consumption expenditures were rising, but consumer debt wasn't. It was pretty much just flatline. Then Reagan took office, as I said, and he deregulated the financial industry. And then it was basically, let's give credit to anybody that can fog a mirror. And look what happened. Now, importantly, through this process, we've done a lot of things, right? We've deregulated industries. We deregulated we told corporations they no longer needed to fund their pensions so they could invest in whatever they wanted to invest in. And so they didn't have to stay just in treasuries. They could buy stocks, and that's worked out great for pensions. We've done all these things over the course of the last 40 years. And again, you can see this very negative trend in personal consumption expenditures, which is derived from what? As we talked about before, as a consumer, you can't consume until you do what? Produce first. You've got to go to work, earn a paycheck. So as wages fall, then personal consumption expenditures slow down and GDP with it, because personal consumption expenditures is 70% of GDP. So unsurprisingly, wages drive everything. And so why did we have inflation? So you see this massive spike, right, in 2020? Well, that was because of all the government. We shut down the economy. We send everybody checks. Nobody can get workers because we're all told to stay home, and we're giving people enough money not to work. So restaurant workers and food delivery services and everything else that people needed, they couldn't get workers, so they had to pay people more in order to get people to come work, right? So you had this massive spike in wages. You had all this free money going in. And so you got this massive spike in wages, economic growth, and personal consumption expenditures. But now that's all reversing. Now, if you would just leave it alone, inflation is falling, right? We just had 2.9% inflation, right? CPI. Now look, we've had this conversation about food prices before. Yes, inflation is higher today than it was in 2020. The cost of food and water and gasoline and utility bills, etc., they're all higher than they were in 2020. And they're never going back to that because of government interventions. Prices have permanently stepped up higher. We are never going back to drastically lower prices on the things that we consume because we have permanently stepped up the input cost of all these things. That's not going to change. And again, this is where everybody misunderstands the reality of the situation is look, if I'm a producer of corn, right? So I'm a farmer and I grow corn. Well, I can't just arbitrarily cut what I sell my corn for. I could, but I got to pay for the operations. I got to pay for the machinery. I got to pay for my laborers. I've got to pay for the fertilizer. I've got to pay for the water. I've got to pay for the electricity. I've got all these costs that go into raising that corn, growing that corn. They were good little corn cobs. They're highly educated. But growing that corn, I've got all these costs that I have to absorb. So either I charge more for corn or I go out of business. Because the input cost, all those things that I use to grow corn, those prices haven't come down either because the people that have to produce those products are also impacted by the very same things. So the reality is that over the course of time, we will normalize the current price levels if we just leave things alone. But it'll be painful for a while. But it's the whole situation with everything, whether it's the debt, whether it's the economy. If we would leave things alone, yes, it would be painful. But we would come out on the other side in a much better place than where we are currently. Quick break, we'll wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Real quick before we get into our conversation, because it's been depressing this morning. After 18 months, my wife is very excited because on Friday, she gets to move into her newly remodeled house.
Congratulations.
So she's very excited about this. And Saturday, she came, I'm trying to work. I'm in the middle of an interview. She comes bounding into my office, jumping up and down, and she's so excited. And I'm like, honey, I was like, give me 1 second. She goes, come in. She's signaling me, come inside, come inside, come inside. So I finish up my interview. It takes me about 20 minutes, and I go inside. And she's so excited. And she's like, I have something to show you. I just can't wait to show you this. And so she goes into the other room, and she brings in a cart that she found at Academy. It's got, and basically this is just a big towing cart that you can use for anything. It's got it folds out, so it collapses, so you can easily carry it around. But it's got a handle and it folds out. It's about the size of a wagon, a large wagon, right? And you can put all kinds of stuff in. It's got the sides are made out of fabric that are lined, so you can put ice in it and put, like a rolling, ice chest, or you can put food in it or whatever. But she's so excited about this thing because she bought it at Academy. And so now she can just load all her stuff up to move to her new house and just wheel it into the new house and unbox it. But I have not seen her this excited. She goes, honey, now I won't tell you how much I spent on her anniversary present we just had, but I could have gotten off cheap if I would have known about this thing, because this made her happier than the anniversary present I bought her. So it's these little things, my wife is weird, because normally if you say, I bought my wife a Roomba for our anniversary, it's like, oh yeah, you're getting divorced. No, that kind of stuff thrills my wife. She loves that kind of stuff. So I mean, you buy her some workout gear. I with my wife, I can do all the things that men are told never do, right? You never buy your wife workout gear. You never buy him a vacuum cleaner. You never buy him these things, because that'll certainly get you divorced. No, that actually works with my wife. So it took me 15 years to figure that out, but I'm getting it now, right?
Happy wife, happy life.
Exactly. Don't complain. But look, I'm figuring it out. I don't have to buy jewelry anymore. I just buy a Roomba and I'm good.
Gift cards to Home Depot.
Exactly. Honey, I'm going to take you on a shopping spree to Home Depot. Yeah! These are all good. All right. Anyway, but she's very excited. So 18 months of this. I will never remodel a house ever in my life again. This was my one time to do this, and I have learned valuable lessons. And the most valuable lesson is never do this. This is not a good idea. They say remodeling a house will either end in success or divorce. We got close. There was a couple of stressful periods in there during this remodel that I didn't think I was personally going to survive. So,
but the Roberts live on.
Yes, for now, relatively unscathed. Just a few minor nicks and cuts. All right, let's talk. Let's wrap up this conversation on Kamalanomics this morning. Look, the bottom line is that what we're doing in America is nothing new. The process and the cycle that we're in is nothing new. It is something that is repeated throughout history ever since the dawn of time, and just in different forms. I wrote an article on Friday talking a lot about this. A lot of these charts that I showed you this morning, they're in the article on the economic growth myth that I published on Friday. It's on the website, realinvestmentadvice.com. But again, what's going on is not a surprise. Alexander Tytler in 1787, he was a Scottish economist, and he commented on the then new American Republic. And he made a prediction. He said, I quote, "A democracy is always temporary in nature. It simply cannot exist as a permanent form of government. A democracy will continue to exist up until the time that voters discover that they can vote themselves generous gifts from the public treasury. From that moment on, the majority always votes for the candidates who promise the most benefits from the public treasury, with the result that every democracy will finally collapse due to loose fiscal policy, which is always followed ultimately by dictatorship. The average age of the world's greatest civilizations has been about 200 years. These nations always progress through the same sequence. The sequence is here on this chart." So every society, and think about where we were 240 years ago, basically. And as we were founding this new republic, you had men of faith, right? So if you take a look at the Constitution itself, it mentions God 4 times in different forms. Talks about inalienable rights, these type of things. But the foundation of the economy, or the country in this case, is always based on faith. And then from there, they said, okay, we're going to establish this country based on faith, and then, courage, the fight for the freedom. And then you eventually achieve prosperity and freedom, and so now the country's growing, things are becoming much better. So as that eases, and now we're progressing through history here, we then turn to focus more on, so this is now, moving through this, through the 60s, moving through the 70s, where, we've been through World War I, World War II. Basically, freedom has been achieved globally, in theory. And the country is becoming extremely prosperous at this point. But we're manufacturing, right? We're manufacturing everything. We're rebuilding the world as we know it, but a lot of prosperity being built, lots of opportunity here in the country. And then we started changing our focus. And again, to go back to that chart I just showed you a few minutes ago about, all of a sudden we have access to all this free credit. We can just buy everything we want, right? So the focus turns to material things. Get to the late 90s, early 2000, we've turned to selfishness, right? It's all about me. It's the me generation. And then, of course, as things start to run into problems, right? We move from selfishness and complacency into apathy, which is where, none of this is my fault. It's not my fault that the economy is this way. It's not my fault that I've made poor financial decisions. It's not my fault that, I didn't do the things I needed to do to put myself into a better position. None of this is my fault, right? And I need the government to fix these things. And so we start voting for government to fix my problems because none of these things are my fault. And you can just see over the last decade in particular, right? Whether it's crime, increases in crime, or if it's in, increases in economic disparity, whatever it is, talk to these people. It's not their fault, right? We need higher minimum wages. It's not my fault that I'm stuck in a minimum wage job, which is a starter position. You're not supposed to stay in a starter position your whole life. It's not meant to be a livable wage. But it's not my fault that I'm stuck at this level. I need somebody to fix it. Okay, great. We'll give you more wages, right? So then it increases food costs, it increases everything else, and all of a sudden they lose their job anyway because that's how higher wages work out. Take a look what happened in California once they hiked minimum wages to $22 an hour. But at that point, though, we keep allowing government to take more and more control, and we become dependent on government. And then ultimately, we kind of cycle back around to why our founders left Britain to start with to found a new nation. Because once government has complete control, it becomes bondage for its citizens. And interestingly enough, we've lasted a little bit longer than 200 years, but we're completing the cycle. So the problem that, we face heading into this election more than anything else, and the impact of policies on economics, is that we keep voting for the same things that have a very poor track record of working out well for the average American. Now, this doesn't mean that asset price of the stock market can't keep going up, because the more liquidity you inject into the market, stock prices can keep going up. The wealthy will still get wealthier. And this is, one of the kind of the last legs of that cycle that we just talked about. You have your aristocracy, and then you have everybody else. You have the serfs. So it doesn't mean that if you've got money and you're invested in the markets, that's not going to continue to go on for another, 100 years. The last part of the cycle takes a long time. It's not something that happens next week, next month, next year at all. The last part of the cycle will probably outlive most of us. So it doesn't mean that the markets aren't going to keep going up. It doesn't mean that as we move from dependence into bondage, that the government's not going to keep doing more and more things to keep the wealthy wealthier. So, invest that way. But just understand what the consequences are. And so, but these are a choice of policies. So what's important from an investing standpoint is understand what these policies are, understand where we're headed, and invest accordingly. But one thing that we know for certain is that if Kamala Harris institutes the policies that she's promoting, the outcome economically is not beneficial, particularly for those in the bottom 80% of the country. All right, that wraps up the show for the day. Sorry for being so depressing this morning. I'll be happier tomorrow. Just being cranky. Get by the website. That article is on the website now. If you want to get all these charts and graphs, of course, it's on that article. Posted Friday, Economic Myth. It's there at realinvestmentadvice.com. Also, our daily market commentary is out this morning, and we'll see you back here tomorrow. Have a great day.